Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today I'm going to talk about two major trade opportunities for you guys. I'm going to touch on a couple other things as well. Before I do that, today we closed out another winner. I think it was about 11.5% in verified investing alerts. And again, if you're interested, folks, come to InTheMoneyStocks.com. You'll see my name at the top of the website. There's a drop down underneath. My two services are there: verified investing alerts for swing trading stocks, verified option alerts for swing trading options. Bottom line is 192 closed out trades in verified investing alerts this year for a net profit of 1,743.67%. So almost 1,750% net gain when you add up the winners, subtract the losers. All right, the markets today, dead quiet, volume's dead. This isn't even what I want to talk about, but it is worth noting that you continue to hover right up in this range. You can see these trend lines here. If you connect this pivot high, you get yesterday's Pierce high and then today's high as well. But more importantly, I have a couple stocks I want to bring to your attention. One is on the buy side. It is a biotech. It is making one of the prettiest bull flags I have ever seen. Take a look. Intercept Pharmaceuticals had this nice pop up, and look at this tight bull flag. Oftentimes you get these flag patterns that aren't as pretty. This one is about as pretty as it can be. It also filled this gap on this pullback right here today and yesterday. So this chart, again, folks, is a beautiful one. Now remember, beautiful charts don't guarantee winners, as we know, but nonetheless, this is a chart where you have to assume that pattern is going to play out, and it could play out in a big way. I mean, you could be talking $50, $55, maybe even a move up here, which is the $55 range, right up there as a target price. So that is as a long buy opportunity. Again, it's a high-risk biotech, so don't overload the boat. This would be a small position in my portfolio, somewhere in the range of about 3 to 5% as a maximum. All right, the other stock I want to talk about is Restoration Hardware, RH. Take a look at this, folks. I am short this stock currently with a small position. The reason why I like it as a short is because it hasn't pulled back, even though the COVID reopening plays are doing better. This is a COVID play, meaning that Restoration Hardware does home furnishings, and we know that as things reopen, people are going to furnish their homes less. They're not going to be redoing their offices, their home office. Once things reopen, some people will be back at work. Those people that are still at home probably have already done it. And what's more important here is, first of all, it's a relatively low floater, so you got to be a little careful in that respect. But what I like about this is, if you look at Home Depot, look at the chart. This is a good comparable, right? Home Depot, here was your high, lower high, lower high, and this Home Depot is getting very close to a breakdown. Look at this trend line right here. So Home Depot is already way off of its recent highs. Take a look at Lowe's, which is a good comparable as well. Here was your high on Lowe's. Look at this thing coming in. Restoration Hardware hasn't been discovered yet and fallen yet because it's a smaller company. It's only about an $8 to $9 billion market cap, while Lowe's and Home Depot are massive. But this one will come in, folks. This is a no-brainer. Obviously, again, it's a high-risk play because it's thin, and you wouldn't put a ton of money. I'd say same thing, 3, maybe 4% of a portfolio in it on the short side. But RH makes total sense. And again, think about it like this: if anyone was going to redo a portion of their house or their home office, they were going to do it during COVID. As we reopening, you're going to see a major glut in spending, meaning you're going to see less and less spending at places like Home Depot, Lowe's, Restoration Hardware, RH, which is this company. It makes total sense. And this company, again, if I zoom out, look at the run this has had since the COVID lows, from basically $75 to $462 today. Got as high as about $470 the other day. This stock has written all over it a move down to about this level here, which is my first target of 321 and change, and then ultimately to about the 250 level on the downside. 250 probably doesn't get tagged, though, until next year at some point. The 321 area, possibly by December, January. But again, the second target would be kind of a mid-next year target, in my opinion. But again, RH makes total sense here, folks, if you just think about it logically. I wasn't going to discuss this, but I think I do want to on Tesla. Tesla is a no-brainer here on the short side. I want to discuss the reasoning here. So Tesla has been reaching out to Cybertruck people that are reserving the Cybertruck or have reserved it, and they're trying to get them to do a lease. All right, the issue with this is very simple. Number one, They're pushing really hard into year end, which means they're probably struggling to meet their delivery numbers for the year. Now, the market expects something like 180,000 deliveries in this latest quarter. That's 40,000 more deliveries than they've had in any previous quarter. It would be a 40,000 more than their record, essentially. So that's an issue there. Another issue is if they're reaching out to these Cybertruck reserved candidates, these people like me that have reserved the Cybertruck, then they're doing their leases, their shortest leases are 2 to 3 years out. Well, the Cybertruck was supposed to be started to be delivered in late 2021 to early 2022, basically a year from now. And if you're getting people to do 2 to 3 year leases, what does that tell you about the Cybertruck? It tells you there is a delay in the Cybertruck. The Cybertruck is likely going to be delayed 6 months to a year at minimum, and that's why they're pushing for the leases on current models of the Tesla vehicle. So these are concerns that, yes, they're getting added to the S&P. Whoop-de-doo. Stocks all across time have been added to the S&P 500. That's nice, but it doesn't change the fundamentals of the company, of what's going on internally. And these are concerning things, folks. And if you're an investor in Tesla, be aware of that. There's no guarantee that they'll miss deliveries. Maybe they can get enough of the Cybertruck reservation people to get the newer, the models that are currently on the market, and they can deliver enough to meet their goals. That's a possibility. But it is concerning that the leases are 2 to 3 year leases at a minimum, because that does mean that the Cybertruck gets delayed. All these things would be potentially bad for the stock. So keep that in mind, folks. I did want to pass that information along to you. I think it is worth knowing, and we will find out, obviously, how things play out here in the coming weeks and months. Have a good one. Come find me at InTheMoneyStocks.com if you want trade alerts, daily videos, live broadcasts where you can ask me questions, see my charts live. It's all there. I give exact entries and exits on stocks. Come join me there. Have a great one. Take care.